Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down to bite-sized pieces. Today we've got a ton of things to go over, so let's just go right in. So first up, Bitcoin drops 4% an hour because people think that Satoshi is back and moving things, and we're going to take a look at that and how ridiculous it actually could be. Also, Rich Dad Poor Dad author Robert Kiyosaki reiterates the fact that you need to buy Bitcoin to save yourself, and he talks about the impending financial crisis also. Billionaire Bitcoin investor bull Tim Draper reveals his top investments and biggest shakers, and he sticks by fast about what he said about Bitcoin going to 250,000 in a couple of years. And finally, a pretty big deal comes up. WordPress and Coil are coming together, and they're going to have a payment system which could be backed and is backed by XRP and Ripple. So let's break right in. So first up, I'll make this quick. So there is a huge, massive drop in the Bitcoin price. And I'm using CoinGecko just to show you what's going on. I like CoinGecko because, it breaks down an hour, 24, 7 day, 24 on market cap. So Bitcoin was actually, I think it was around 8,900, 88 something or something like that. But it was as high yesterday as around 96, 9,700. So it dropped precipitously quite quickly. And it's all because of one instance. And what has happened is it looks like there are some movement. And I'll just read the quote right here. There was a movement from a wallet that was started in 2009, which was the same year that Bitcoin came around. So what it states here is since the Bitcoins moved, had been mined in February 2009, and there were very few people, other than Bitcoin investor Satoshi Nakamoto, mining Bitcoin at that time. Many people got worried that this could mean that Satoshi was alive, and he might be thinking of dumping some or all of his Bitcoin holdings, which could badly hurt the Bitcoin price. So here's the thing. If Satoshi Nakamoto is around, and if we took a look at this, somebody moved, we'll say, 40 Bitcoin transferred from a possible Satoshi-owned wallet. You have to understand that Satoshi Nakamoto, whoever he, she, or they are, when they were around in 2009, there was also other people also mining Bitcoin or have access to that wallet. So to think that it is actually that person or that entity could be within the realm of reason, I suppose, but just because somebody moves 40 Bitcoin, that was around 2009, and was mining it, or got access to a wallet from someone who was around that time, does not mean that Bitcoin is going to go to zero or go down or get sold off like crazy. It just makes no sense. So when I hear about these things, it drives me a little bit crazy because it just shows you how insane this market actually is. And because of that, 25 million in BitMEX longs were wiped out in a matter of minutes as Bitcoin crashed below $9,000. So as I've always said in this channel, if you're a trader, good luck to you. If you're doing on leverage trading, also good luck to you. I do not believe in that. I believe it's bad for the entire market, and this is the type of story that gets me crazy. So if you're still doing this and still doing all these leverage trading and you got wrecked, I feel sorry for you, but in reality, you shouldn't have done it anyhow. And I'm just going to tell you it's going to happen again. So if you're a trader and a TA person, you like to look at charts and everything else, how can you, I just have a question. How do you factor this in? How do you factor this into your trades and to your leverage trading and doing day trades and like, oh yeah, there's no way you can do it. So me personally, I do a very boring thing. It's called dollar cost average. Every week I put 25 bucks into Bitcoin, Ethereum, Chainlink, Cardano, EOS, all those things. And that's all I do. And it kind of helps me with the volatility. Now, if you believe, like I believe, that cryptocurrency digital assets will go up tremendously over the next 1 to 5 years, then this is a pretty good system. Now, if you think it's going to go to zero or it's going to just crash and go to nothing, then maybe trading is the best option for you. However, I don't think that way, and I think a lot of people who watch these videos do not. But if you're trading and you're getting wrecked, sorry. Anyhow, let's move on. Next up, Robert Kiyosaki, the Rich Dad Poor Dad author, says, buy Bitcoin and save yourself. And just so you know, that there is a lot of noise out there, and there's a lot of noise and there's news. So the things that I like to bring to this channel is level-headed news of what we can see as far as moving forward as far as mass adoption. So I like to see when big people in the field, such as Robert Kiyosaki, who is internationally known for the Rich Dad Poor Dad series, talks about Bitcoin. I think it's important, and it kind of moves the expands the narrative that Bitcoin is actually a good thing. So what he says in a tweet was, New York City's going broke. All cities count on income, tax sales, tax and real estate taxes, especially commercial, regarding pension contributions for teachers, firefighters, and police. USA is going broke. Fed printing fake and cannot save you. Get gold, silver, Bitcoin, and save yourself. So this is just one tweet that he's put out. He's had multiple where he talks about Bitcoin. So when he does these things, it gets people into the idea of cryptocurrency digital assets, which will move people towards mass adoption. Now, I will say this. Be aware that people like Robert Kiyosaki and Peter Schiff have been preaching that the world will end financially for years. And you just have to understand that that's their thing. That's what they've been saying. Now, I don't think financially there's going to be a total global meltdown and everything will collapse. I think we're going to go through tough times. Don't get me wrong. But you just have to understand that this is what, and I don't know if they believe it so much as, just like to say it. Now, maybe they totally believe it, but what I try to bring is just the facts, and I let you decide. I'm not going to force any type of narrative down your throat, but these are the things that have been said. So, why does Robert actually think that? Well, his idea is that the economy is dying, and the Federal Reserve is simply incompetent with the trillions in liquidity being infused in the system. And he went so far as to say that, hey, Bitcoin is going to be $75,000 in 3 years' time. And I'll talk about, my prediction of 100,000 in around 18 months. But the last part is just to wrap it all up. The rationale behind Kiyosaki's statements is that while fiat currency weakens due to the increased supply, precious metals and Bitcoin are immune to such debasement due to their guaranteed scarcity. When investors realize this, they will flock to these assets in very large numbers, ultimately driving the Bitcoin price up. So just real quick, this is how I see it. Now, Robert Kiyosaki says in 3 years it'll be 75,000. I think it'll be about 100,000. There's been 3 halvings. The first one was in 2012, second one was 2016, and we just had one in 2020. And you can see the price at the halving for Bitcoin was $12 in 2012, and then it shot up almost 8,000% after that halving, and it took about a year. The second halving happened in 2016. The price at the time was $650, and it took 1.5 years, and it went to $20,000, which it decreased by about a third to 3,000%. Not too bad for 4 years waiting. Now this last one, we had the price of the halving was around 10,000, 9,000 something or other, something like that. I like to use round numbers because just easier for me. And if you take a look at from the first, the second, and the third, decrease everything by a third, you're going to get about 1,000% increase. So maybe in 18 months or so, we might see a $100,000 Bitcoin. Now, these are just past principles, and of course, past performance doesn't equal to future performance, but we could see it's somewhere around there. And I believe that Bitcoin price will go up. Now, this last part here was interesting, where it talks about, he says, look, it's going to go up because there's a debasement of the fiat currency and there's a scarcity to Bitcoin. So investors, when they actually wake up, they're going to pile into the Bitcoin bus, I guess. So it's all that plus smart money. And there's a lot of different people out there, a lot of different billionaires and hedge fund and institutional people that are really pushing the narrative of Bitcoin. And if you take a look at it, really, in all honesty, Bitcoin has outperformed all other asset classes for right now in 2020. It's actually, this was a little bit old. It's up 39%. It's outdone U.S. Treasuries, gold, the NASDAQ, credit, oil, everything like that. And it did the same thing in 2019, where it was 92%, NASDAQ 35, 28. So it outperforms all other assets that are out there. Now, if you want to take a look at this year right now, especially with that big drop that we just had, we're still up. So, hey, not too bad. That's for the year. And if you want to take a look at a broad spectrum of how Bitcoin has done since 2011, we can just take a look at yearly candles. And 2011, 1468. And this candle goes up. Now, 2014, not a great year. And 2018, not a great year. But everything else, pretty darn good years, and it's tough to have that year over year consistently. So I think when you put it all together and say, look, this is a new asset class and it's really expanding, it's really doing well, you're going to take a look at these big players like Fidelity Digital Assets, 2.5 trillion assets under management. You're going to have Ameritrade. You're going to have also Grayscale with their 2.2, now 3.7 billion assets under management. And their big players are institutional investors and also hedge funds. That's where 88% of their money comes from for their products that they sell. And also, this was an article that just popped up. I was going to go over the whole thing, but Grayscale director talks about how smart money is flooding into crypto at a remarkable rate. And he said, hey, it's remarkable how much inbound interest we're receiving at Grayscale, particularly since the COVID pandemic, from HNWIs, RIAs, FAs, family offices, and hedge funds. Investors aren't waiting for economic stability before adding crypto to their portfolios, he noted. This is Michael Sonnenschein, Grayscale Managing Director. And just so you know, Grayscale, I mean, they have the Bitcoin Trust, they have Ethereum Trust, XRP Trust, Ethereum Classic Trust. They have all different types of cryptocurrency digital assets that they're putting into trust, so these hedge funds and institutional investors can really get involved. And then, I mean, we've even got like the Tudor Group, where billionaire Paul Tudor Jones just came out and said, look, I'm going to put 2% of all of our assets into Bitcoin futures. So, and you take a look at that, and also somebody like Van Eck, who is a big gold bug. Let me scroll up. Van Eck put this out in January 2020, and like I said, they're big gold bugs, but even they are like, look, this is going to outperform gold, and it's going to be a huge boom for this new emerging asset class. And they just took a look, said, look, if you take gold versus Bitcoin, as far as like fungible, meaning is it interchangeable, non-consumable, is it portable, can you move it, is it durable, can you divide it, is it secure, easily transactable, is it scarce or finite, is it government issued or decentralized and smart, crypto outperforms gold in every other piece of it. And here's the crux of everything I'm trying to bring together, which is this. What Van Eck, what Fidelity, what TD Ameritrade, what Grayscale, and all these different, and even the Tudor Group, what they're going to tell their clients is this. They're going to say, look, all these different things that are going on, there is a potential for increased portfolio diversification. What does that mean? What they're going to tell their clients is this. A small allocation of Bitcoin can significantly enhance the cumulative return of a 6% equity and 40% bonds portfolio while minimally impacting its volatility. Okay, let me rephrase that. What they're going to say is, look, Pete or Jane or whoever's in front of them, we know that there is a high amount of volatility in the markets right now. We can see it everywhere. However, there's an emerging new asset class. We've got Bitcoin, we've got Ethereum, we've got XRP. We've got all these different cryptocurrency digital assets that can offset the losses that we may incur in the traditional markets. Now, look, Bitcoin has, year to date, outperformed every other asset class these last 2 years and going back even to 2014. So what I want to do is we want to allocate 2%, 5%, 8% of your portfolio into this new emerging asset class, and we think it's going to be a winner. So again, just going by everything that I just talked about and what we just talked about as far as trading and leverage trading, everything else, if you want to go that route, it's up to you. I'm not going to tell anybody not to do anything. But for me, I believe that things are going to go up and over the next year, 1 to 3 years. And if you just dollar cost average in, just make some small amount of things. It's not very sexy, but it'll pay off big time. All right, let's move on. Next up, billionaire Bitcoin bull Tim Draper reveals his top investments in big shakers. So I always like to listen to what smart money is doing. And Tim Draper, he is a guy who's picked a lot of winners. He was the first one to invest into Hotmail. He got into Robinhood, I believe Netflix. He also did a big investment into Baidu, which is the internet browser in China. And he says, look, I mean, these are my big investments, Robinhood and Baidu. Now, he's not perfect. He's had some misses, but for the big ones, he's really swung for the fences and he's really done pretty well. But moving on, the big thing he talks about here in this article is he states, Bitcoin remains one of the most exciting prospects of the future. At Virtual Blockchain Week 2020, Draper said he stands by his prediction that Bitcoin will hit 250,000 by the first quarter of 2023. He believes a big catalyst will be adopted of Bitcoin from retailers. And this is kind of what we just talked about. So I have 100,000 in about 18 months. He's got 250 in a couple years, or 3 years, we'll say. So who's right? Hopefully both. Hopefully both. We both hit these numbers. That'd be fantastic. But what he says in the next part, I have to run it by everybody and ask the question. So what he says here is that he says all of a sudden the retailers will say, you mean I don't have to pay 2.5% to 4% to the banks every time somebody swipes a credit card? Why don't I accept Bitcoin? And that was exactly how MasterCard and Visa took market share away from American Express. Remember American Express? Man, I haven't seen those cards in a long time. They charge a little less. You'd think that doesn't make a big difference, but it does. And I can tell you as an online retailer, I have my own online education platform. It sucks. So moving on, the legendary investor who has about 600 portfolio companies, along with another 600 in the Draper Venture Network, says he has a global outlook and is still looking for big dynamic markets, new technologies, and great people. But the landscape for entrepreneurs has changed dramatically with a trend toward a very high concentration of power, and that's concerning. And he states, the other thing that we noticed is that it's fewer, bigger winners. Whereas when I got started, everybody did pretty well. And if I had a big winner, it was like a huge home run fund. Now there might be more losers and more concentration in one or two of the great winners, but those great winners have a bigger world, a bigger environment to go after, and they get much, much bigger than they did back in the 90s. So here's my question to everybody. Which cryptocurrencies and digital assets will be winners, and for what? Because for me, my winners, and this is how I see them working out. Bitcoin, I see it as like a store of value. Maybe payments, but I don't think it's going to be payments, and we're going to go over that right now. Ethereum, I see it as for smart contracts, decentralized finance, and I see it as a winner because everything's built on ERC20 tokens and other types of ERC tokens, but it's all Ethereum. And then for XRP and Stellar, I see that as for payments. So that's why I invest in Bitcoin, Ethereum, XRP, and now Stellar. I also invest in Cardano, EOS, and Tezos. And the reason that I invest in those three is because if Ethereum doesn't make it, we're still going to need smart contracts. So I think one of those three is a solid choice if Ethereum for some reason fails. But then again, I don't think it's a one-size-fits-all. And I do believe that there's room for everybody. Now, as far as Bitcoin and payments, this is where it gets a little wonky. Because what Draper is talking about, and this was an article, this was back in April 28, 2020, so pretty recent, about a month ago, or 3 weeks ago. And what he says is the same type of thing, right? You can pay 2.5% to 4% to the banks every time somebody swipes a credit card. Sure. Draper says that the reason why people are going to adopt Bitcoin is because they're going to use it for payments. And Draper says a company called OpenNode, which he invested $1 million in, can help make it happen. OpenNode is building a Bitcoin payment gateway on the Lightning Network, known for extremely fast Bitcoin transaction settlement. So if you're not familiar with the Lightning Network, this was actually written by OpenNode in their blog, and I thought it was really well written in 2 paragraphs. So the Lightning Network runs on a peer-to-peer level where all transactions occur on an off-chain network that's built on top of Bitcoin. These transactions do not require confirmation from the Bitcoin network since they occur off-chain. This means that transactions can be executed much quicker through a smart contract, requiring much lower fees and allowing much higher throughput. So how does this work? So to create a bi-directional, coming and going payment channel, 2 parties must decide to open a payment channel where they can transact funds back and forth from each other's wallets. To set up the payment channel, both parties need to fund the creation of the channel with an on-chain Bitcoin transaction. So this is how it works. You go to Starbucks and you go there and you pay and you say, I want to use Bitcoin. Sure, we'll take Bitcoin. Now in the regular, without Lightning Network, every transaction that would happen as far as with Bitcoin, it would slow down the network so much that each transaction would be a massive amount. And the reason we know this is because it happened in 2017 when everybody was buying up Bitcoin and the network became so congested and became so expensive, it almost became unusable. So if you're around 2017, put in the comment section what it was like back then as far as the payments. You cannot use it for payments right now. So they're saying that what we're going to do is we're going to go off-chain. So if you go to Starbucks and then you say, I'm going to use Lightning Network. and we're going to start up a transaction. Okay, so we're going to keep going payments back and forth and back and forth and back and forth as many times as I want to go to Starbucks or Home Depot or Walmart or wherever it is, and we will settle this at a later date on-chain. So off-chain is like a side little ledger going, okay, Mary bought $2.50 worth of coffee on Tuesday, Thursday, and Saturday. And then at the end of the month, I'm going to debit her account. Let me do some quick math. $7.50. Okay, and that'll occur at the end of the month or in 2 months, whatever it is, right? So that sounds good, right? However, the total amount of the payment channel is the max amount of funds that can be transacted, thus protecting both parties from losing money, more funds than necessary. So what that means is you'd have to go to me, this is what it sounds like. Correct me if I'm wrong. I could be incorrect. You have to go to Starbucks and buy the maximum amount you usually would buy. Let's say it's $15, and that's the maximum you can spend. If you go over that, they're like, oh, we got to start a new transaction on-chain. There is no way on this green earth that Bitcoin can handle those transactions. It is not going to happen. So I know that Jack Dorsey of Twitter Square fame is trying to do this. He's trying to give a bunch of money to people to increase the Lightning Network. I just don't see it happen. Now, tell me if I'm wrong in the comment section, but that's how I see it. And OpenNode, the way that they do it is they're going to allow you use Apple Pay and pretty much get paid in Bitcoin from dollars, and they do it automatically. But they use an intermediary type of exchange. So when the money gets in, it goes to this exchange, they automatically put into Bitcoin. So it's like an automatic thing. Again, I just don't see it right now. Maybe it's just my limited or lack of vision. But let me know in the comment section what you think. But I don't see Tim Draper's idea of Bitcoin being used for transactions is actually going to work. Now, this is what I do see working with transactions. Let's move on to the next story. So this is from Forbes Crypto. This is our last one. Ripple's former markets boss makes his Forbes debut with this exclusive on integration that brings XRP to WordPress. And I think this is huge. So full court WordPress, Coil deal boosts functional blockchain and XRP. This is written by Corey Johnson. First of all, I'd like to get a background of anybody who is writing an article that I can look up. So Corey Johnson, who's this guy? So this guy is a technology journalist, broadcaster, hedge fund portfolio manager, short seller, and growth investor. Currently advisor to biotech companies like Brain Trust. Fundamentally, he's an entrepreneur. Good for him. And he helped to start up media companies such as Industry Standard, Slam, TheStreet.com, and Vibe. I was CNBC's first Silicon Valley reporter. Later helped create the TV show Bloomberg West for Bloomberg TV. Hosts a radio show and podcast Bloomberg Advantage. So right now, pretty good go-getter. Good for this guy. Last part is the most important. I also served as a chief market strategist for the global payments blockchain company, Ripple. Now, do you understand why I try to get the most background from people who are writing these articles? Because now he is a journalist and he, writes as well as he can, but you have to understand there may be a little bit biased there. And just like me, when I talk about Bitcoin and Ethereum and XRP, Chainlink, Cardano, EOS, Tezos, now Stellar, I'm probably biased because I own those things. Anyhow, it's still a great article. Let's take a listen. So, writes here today, the San Francisco-based blockchain startup Coil announced a new integration with WordPress. It means that website creators could get blockchain metered payments, whether the content is free or behind a paywall. And to me, this is huge, and it's for a lot of different reasons. So like I said, I have an education website, and for every transaction that comes in, I have to pay 2.99% plus 30 cents per transaction via Stripe or PayPal. Now, over the course of the year, I spend thousands of dollars. Thousands. And just so these credit card companies can process these transactions. Would it be great if Bitcoin could do that? Yeah, sure, but we just talked about it. I don't see it's going to be used for payments. I could be wrong, but I don't see it. Anyhow, according to a W3 Tech survey in April, over a third of the web is published using WordPress software, and I can attest to that. Every website I've ever used has been with WordPress. It's the easiest, it's the fastest, I just love it. WordPress has 63% market share. Number 2 is Joomla at 4.1%. So there's a big, wide swath between number 1 and number 2. Anyhow, Coil's technology notes when a user visits a Coil-enabled site and apportions a payment of the site paid out in cash or cryptocurrency, specifically in XRP. This could be the biggest use of XRP outside of the global payments company Ripple is no coincidence. Coil's founder and CEO, Stephen Thomas, was Ripple's chief technical officer until 2018. Coil was backed by Ripple in 2018, which participated in a reported $4 million seed round, and then in September 2019, tossed in a massive investment of 1 billion XRP tokens. And then the author states, and to be clear, I'm hopelessly conflicted reporting this story as I once worked at Ripple. To be equally clear as the writing, I don't own the XRP, so I can appreciate the transparency. It's very nice to put that in there it's really should be mandatory, let's be honest. But yeah, what this comes down to is this. In business, what I've learned is that it's not what you know, it's who you know. And that's what makes the world go round. And you can see this really being the catalyst for, I think, why this is all going down with Coil. Anyhow, to facilitate paying website owners, Coil is also announcing a new crypto wallet partnership with Francisco-based Uphold, which boasts of trading in 60 currencies and having deals with banks in 35 countries. So can you see where this is all going? And this is pretty good, right? We've got WordPress, which is major across all the websites in all of the internet. And then you've got a payment processor or a payment transaction with Coil, who's going to use XRP, which is super fast as far as TPS or transactions per second. So speaking of TPS and transactions per second, here's a great visual. I like visuals because it just helps me to process different things. And this is where we take a look at where everything lies on the continuum of how fast transactions per second or transactions are actually processed. So Bitcoin, we're looking at a whopping 7 transactions per second. Wow. Ethereum 20, Dash, Litecoin, Bitcoin Cash only at 60. PayPal 193. That's kind of low. I didn't think it would be that low. Ripple 1500 and Visa, the king right now, 24,000. So if you just look at that, just to process. I mean, right now, if fiat currency just went away, Visa just went away, and we just used Bitcoin, the entire system would crumble like you wouldn't believe. Now, I, of course, am a believer in Bitcoin. I just don't think it's going to be for transactions. Just don't think it's going to happen. Now with Ripple, I can definitely see it. And then as things improve, why not? So 1,500 transactions per second. It's bigger than PayPal, and it's in between Visa and PayPal. So I could see this definitely being used for transaction, and that is why I've invested into it. So moving on, publishers and individual creators are seeking new revenue streams. Thomas said in a release, at the same time, consumers are suffering from site-by-site subscription fatigue and the invasive privacy issues associated with ads. With the introduction of the web monetizing plugin and more paid options for publishers and creators around the globe, our goal is to provide more choices and less friction for everyone. And I couldn't agree more. Lastly, to finish this up, blockchain is still like the days of getting around the internet without a browser. You could do it, but not many people did. The on-ramps and off-ramps for blockchains are still a little bit hard. Maybe Coil will help change that. And I will say, lastly, is that if you integrate this, me as a website owner, and we use this for payments, so it's going to be one more thing for someone to sign up and to understand everything and to get it all working. So it could be seamless moving on down the road. Right now, not so much. I mean, the groundwork is laid. The transactions per second are there. People just don't really know about it, and that's the whole purpose of this channel, to help people understand what cryptocurrency digital assets are and what they actually could be, and that is the big thing. So here's my question to you. What cryptocurrency digital asset out there could you use for payments? Now, I gave you one example of XRP, but there are a lot of different ones out there that could potentially be used. Let me know what you think that is in the comment section, and I'd love to read those. All right, so that's it for today. I want to say thanks for sticking around with me. That was a rapid fire of what's going on right now and how things are progressing as far as mass adoption. But I really would like to say, first and foremost, thanks to all my supporters. If you don't know, there's a Join Now button underneath this video. And it should just say tip, because it's not, I mean, you join, but I don't hold anything back as far as like what I'm talking about, or I give one section for members and one section for non-members. It's all the same thing. So level 1, they pay a couple bucks, and I appreciate everybody that does. Thank you so much. It's great. Level 2 pays a little bit more, and I just give them a shout out. So all rights off. Thanks. Myself, who else? Dave Plum, the Straight Talking Guy. Check out his YouTube channel. Grant Sharman. That's a good name. Bruce Wood, Baking Benjamins, Noel Flippin Vegas, Martin Lewin, Michael Ralph, and William Howell. So to everybody, 1 and 2, doesn't matter. I appreciate everybody. So thanks so much. If you like that video, I'm going to pop 2 more on the left and right. Don't know what they are because YouTube kind of makes that decision. And that's it. And then thanks for sticking with me to the end. I know yesterday's video got taken down. It was the Joe Rogan video, which we did a live stream, and then it got taken down for some reason. Who knows? But it's back up. So thanks, YouTube, for not cutting me out. I appreciate it. All right. Thanks so much. See you in the next.